Hi, everyone. Thank you for joining this Heritage Foundation Facebook Live. Well, there is a lot going on Capitol Hill as usual, but right now, one huge priority is tax reform. And lucky for us, we have our heritage expert, Romina Boccia, who is here to break it all down for us. So if you could just go ahead and explain to us why tax reform is a big issue right now and what we need to see.
One of the big problems we're facing is that the country hasn't been growing at the historic average rate of 3% or higher, and that's been a big priority for this president. And tax reform is the biggest policy change we can make in order to get closer to those growth figures again. And why do these matter? When we have more economic growth, it means more opportunity for all Americans. It means more jobs, it means higher wages, and overall higher living standards, which can help all Americans. So this is a big priority. Plus, we haven't updated our tax code in 30 years. The last time was in 1986. So it's become convoluted, overly complex, and it's hurting our businesses. One of the big priorities for tax reform this year is business tax reform. And the reason for that is that we currently have the highest corporate tax rate in the industrialized world, which means that we are internationally uncompetitive when it comes to for businesses to locate here in the United States, to do investments here and hire workers. That's something we need to fix.
Thank you for that intro. And we're going to do something a little bit different this time. We're going to go with some questions that we've seen on our Facebook page. So any of our followers who are watching right now, if you have any questions, type your question and we'll see if Romina can respond to it. But we're going to start off with some that we've already seen that have been posted. So a lot of our followers we've seen they've said that they don't agree or they don't buy the trickle-down approach that corporate tax cuts will help them at all. So explain to us how the corporate tax cuts are a cut for the middle class.
Yes. So a corporate rate cut ends up being a wage increase for workers. And the mechanics are a little complicated, but in simple terms, if you think about it, corporations have a lot of choices about where to locate their headquarters, where to do business. So when they locate in other jurisdictions, that means we have fewer businesses in the United States, which means they hire fewer workers. That means gives workers less power to demand higher wages. So right now, because our tax rate is almost twice the global average, the global rate is about 22%. Ours, once you factor in federal and state rates, we're close to 40%. So that's highly uncompetitive. If we cut the corporate rate closer to a rate where we were competitive against, say 15 or 20%, what would happen is that more businesses would invest in the United States, more businesses would locate their headquarters in the United States, we would stop the inversions and the profit shifting that's currently going on because of our very uncompetitive tax rates. And what that means for workers is that more opportunities for jobs, which means that workers can demand higher wages. And this is not just something that I'm trying to tell your Facebook viewers here, but this is something that we've seen in 10 different economic studies done over the past decade. When you look at the incidence of the actual corporate rate, who pays the burden of the corporate tax, it sounds like corporations pay it, but that's just where it gets collected. Ultimately, it gets paid by shareholders, but most of it gets paid by workers. And what we have found is between 75% and 100% of the burden of the corporate rate gets ultimately passed down to workers in the form of lower wages. So workers might not know why their wages have been stagnated and not going up, but if we lower the corporate tax rate, they will see their wages grow, and that's when they'll know that's how it works.
Now, a specific question or statement on that line. One of our followers said, prices are set, and if tax cut happens, corporations will have bigger bonuses to top CEOs to have in upper management, and consumers will not see a significant drop in prices until inflation catches up with reality. So we better start saving those tax cuts as they may not last long. Do you have a response for that?
Yes. So obviously prices are dictated in the marketplace. As we live in a global marketplace, that's where prices go. That's why the corporate rate cut, it doesn't get passed down to consumers, but it will benefit workers. And that's something that that is so important that it's sometimes hard to wrap your head around, but it comes down to competition for workers. When more businesses do business in the United States, they will demand more workers, and as they make more investments, those workers become more productive, and those productivity increases do get passed down to workers. Now, one of the issues we've seen that has eaten up a lot of the wage gains for workers in recent years have been healthcare costs. So that's been one of the main drivers. When businesses pay their employees, they don't just think about the cash wages they pay them, but they think about the overall total compensation package. So if healthcare goes up, they're required to provide you with healthcare. More of your wages will go to pay for your health care rather than go in your pocket. So regulatory reform is another area that can really bring about growth and more wage growth for workers. Tax reform is one of the biggest changes that we can do. And, you know, I understand why the reader may be skeptical that corporations would pass those tax cuts down to workers, and they won't do so voluntarily, but they won't have any choice because the market will force them to as workers become more productive, and they'll need to hire more workers in response to investments here in this country.
Now, what about tax cuts for others? We have another comment here that says, I wish it was true. However, over and over again, tax cuts have ended up in the pockets of big business people and the wealthy. It does not trickle down to those who need it. How about a tax break for the poor?
That's very much on the table. Current discussions for tax reform as to what might be in the final package. There's talk of a doubling of the current standard deduction. The standard deduction is best thought of as a 0% tax bracket. So the income below which you don't get taxed at all for federal income tax purposes. Right now, about 3 out of 10 taxpayers itemize their taxes in order to get special deductions and credits. With a doubled standard deduction, what we would find is fewer than 5%, 95% of taxpayers would just get the extra high standard deduction. Only 5% would have to itemize. So it's a change that would simplify taxes, and it puts money straight into the pockets of lower income and middle class taxpayers. This is one of the biggest changes. Another one that the president has talked about and Ivanka has pushed is a doubling or changing the child tax credit to help middle class families, in particular with the cost of child care and the other expenses that come with growing your family.
Now, if any of you have any specific questions, now's your time to comment, and we'll let Romina see if she can answer. But we'll move on. So another one that we have is, what about cutting spending first before taxes? One of our followers said, cut spending first, then cut taxes. If we cut taxes but not spending, we'll drive an escalating deficit. We don't need more debt. We need less debt.
I must agree with that comment. We need to absolutely cut spending. And this is one of the right now, tax reform isn't really talking about a big tax cut. We've got about $42 trillion in tax revenue projected over the next 10 years. The Senate Budget Committee is talking about maybe reducing the revenue baseline, so lowering tax revenue by about $1.5 trillion. It's not even a rounding error in the amount of tax revenue that we're expecting over the next 10 years. So the tax burden and spending burden has been growing on the American people, which is why it's so important that Congress pass a budget that balances before the end of the decade. And what we have found is Congress could provide a real tax cut to the American people and still balance the budget without even having to cut spending. All they have to do is reduce the growth in spending. Right now, spending is projected to grow by an average of 5% annually. If we reduce that to the rate of inflation, so we don't cut government, we just keep it and adjust it for inflation, that would mean we'd only grow at 2%. So you shave 3% off that growth rate, and boom, you balance the budget and you can cut taxes. The problem is lawmakers aren't willing to do the hard job of cutting spending. That's why I'm a big proponent of a spending cap or a spending limit that will ultimately lead us to a balanced budget amendment. We have to tie their hands because they can't say no to special interests in Washington, which is why the budget keeps growing. But tax reform is still important because one of the key ways that tax reform will help with the budget picture and with our debt is by growing the economy. So that's such an important component of tax reform. We still need to cut spending, but tax reform by itself is also pro-growth and therefore will help the budget.
Could you expand on what some of those special interests are and which ones really need to be cut back on?
So we have the vast majority of the federal budget, 70% goes to what are called transfer programs, where the government literally takes money from one group of taxpayers and borrows it from younger generations to give it to another. And about half of the federal budget goes to only 3 programs. Those are federal health care programs, Medicare, Medicaid in particular, and then Social Security. And all of those programs have been underfunded and overpromised. The Social Security Trust Fund is running out of money, and most retirees are getting way more than they paid in overall in the big picture, given the low returns. So we need changes in the future to make sure the entitlement programs are sustainable, so they can provide for those individuals who truly need those benefits, but they don't bankrupt us in the process. And it's so important that we don't burden younger generations with even higher debt levels, which will ultimately lead to higher taxes. If you think about it, deficits today are just deferred taxation. It means future taxes. But also welfare reform is really critical, because the other component that's not health care and Social Security are welfare programs, which have been growing tremendously as well. A statutory budget cap that encompasses all of these entitlement programs, I think, would trigger the kind of debate we need to have about where our budget priorities are, who really needs benefits, and how to best prioritize among those competing programs to make sure we can fund the budget without increasing the debt and without burdening younger generations.
All right, and now we've also had a lot of calls for the fair tax on our Facebook. They say that the fair tax, or some of our followers have said, the fair tax is the best solution. And we hear this a lot. What's your response to that, and what is the fair tax?
I think that something like the fair tax, where we have one rate on all income, or a sales tax is another version, that's a great simplification over the current system, would absolutely be the ideal way where you want to be. We run up, unfortunately, against political realities in Congress, and right now the goal in order to get tax reform past the finish line is get at least 51 senators to support a package that will be ultimately the determinant factor if they can use reconciliation to get tax reform done. So for that, there will be horse trading, and there will be compromises that will have to be made. But I think the key components of lowering tax rates and simplifying the current tax code are components of the fair tax that are reflected in this current tax reform effort. And I think the fair tax is a great North Star where we want to head, but on the way there, we shouldn't let the perfect be the enemy of the good.
Now, last question as we wrap up here. What policy changes are absolutely necessary, and what do we need to see from Congress this week, especially, and moving forward?
The big priority is jobs and higher wages for American families and workers, and that means lowering the corporate tax rate, because that's a wage increase for workers. It also means allowing for full expensing, so all businesses get to write off the cost of their investments in the year in which they are made. That will boost the economy like no other policy, because it will encourage new investments, which will make workers more productive, will ultimately also lead to higher wages and a bigger economy overall. Another change in order to be internationally competitive, so we can attract businesses to the United States to provide jobs for American workers, is to move to what is called a territorial tax system. So we only tax profits earned in the United States. Right now, we tax the profits of American companies all over the world, worldwide. No other country does that. We're almost the only country that has this kind of policy, which makes us very uncompetitive. So those are the 3 key business tax reforms we need. And we also need to provide tax relief for middle-class families. I think one of the best ways to do that is with a higher standard deduction, because that provides a tax cut for especially low-income people and other American wage earners, middle-class families. I think those need to be key components of this current effort.
All right, Congress, you've got your work cut out for you. Well, thank you so much to Romina, and thank you all for joining us today. Be sure to head over to heritage.org to see more from Romina, and we will see you next time.